Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And let's talk about the coming recession because there are a lot of major players warning about the impending disaster that I believe has been pushed off and papered over since 2008. The recession never ended. The banks are still insolvent. You could look at that on their own balance sheet. But we're going to get into Jamie Dimon in a moment. But first I got to mention this CNBC article that points out the word of Moody's chief economist who says awfully high risk of a global recession in the next 12 to 18 months, which is interesting because we've been talking about this for years and it's just basic economics. You don't put a date on it, you just know it's going to happen because this whole economy has just been plunged with debt and fake currency, inflation skyrocketing, people going into poverty, bubbles inflating and bursting, and the global everything bubble plays into that as well. There's a domino effect on our doorsteps, folks, and it's bigger than just a plain old recession, and we're going to get into that more in a moment. But first, I got to mention this article out of the New York Post, which says, JP Morgan Chase CEO Jamie Dimon warns there's a recession ahead. Now, before I get into the article, I have to note that this is quite interesting coming from Jamie Dimon, who's been very bullish and propping up this fake nonsense economy for a long time. He's been a big culprit involved in this communist system of printing currency out of thin air through the banks via legal tender laws, via usury that is enforced under the so-called social contract, where everyone has to pay off the interest on the debt by being extorted. It's criminal, and the fractional reserve lending at these banks is absolutely sickening. These central planners are destroying humanity. But going into this article, as it says, JP Morgan Chase chief executive Jamie Dimon warned Tuesday a recession may be on the horizon thanks to the continuing trade tensions with China. So again, it dodges in the wrong direction, and we'll get into that again further in a moment. But as it says, and I quote, "Of course, there's a recession ahead," Dimon said during a morning call with reporters after the bank announced its third quarter earnings. "What we don't know is if it's going to happen soon. It does look like geopolitics, particularly around China and trade, are reducing business confidence and business capital expenditure," Dimon said. By contrast, consumers have been largely unaffected by the trade war and are still benefiting from both strong home sales and unemployment hitting a 50-year low in September, Dimon noted. And I will note, Dimon, that the job numbers are fake. If you look at the labor force participation rate, it's actually extraordinarily bad. And I recently went into this with Stephen Moore, who is a head contender for the Federal Reserve here in Las Vegas. But carrying on, it says, and I quote, "The consumer is not under strain. The consumer is doing fine," the banking chief said. Well, the debt numbers don't account for that, Mr. Dimon. Carrying on, it says, the comments come just days after President Trump announced the first phase of a trade deal with China that guarantees another $40 billion in purchases of U.S. goods, but also keeps tariffs on some Chinese imports. The stock market reaction to the deal, which still needs to be put in writing and signed, was muted Monday, with the Dow ending 237 points higher. Businesses have been slowing hiring in recent months as the trade war has dragged on into its 18th month, with economists worried that consumers could be next to feel the pinch. And I quote, "What the market doesn't want and what businesses don't want is an acceleration of the trade war," Quincy Crosby, chief market strategist at Prudential Financial, told the Post. Dimon's bank appears to be immune thus far from the larger business slowdown. JP Morgan's profits rose 8% during the third quarter to $9.1 billion, or $2.34 a share, beating analyst expectations and lifting the stock to $119.96 a share, an all-time high. JP Morgan earned $8.38 billion, or $2.34 a share in last year's quarter ended on September 30th. It wasn't all rosy on Wall Street, however, as three other major banks reported mixed earnings. Citigroup, run by CEO Michael Corbat, reported profits of $4.9 billion, beating expectations. The bank was hit harder than expected by lowered interest rates, which resulted in net interest income of $11.6 billion, or $500 million lower than expectations. Citi's stocks initially fell by more than 2%, but ended up 1.4% to $71 $1.22 a share. Wells Fargo, which named Charles Scharf as its next CEO, one of their million CEOs last month, reported $4.6 billion in profit during the third quarter, a 23% slide from last year. But I want to mention also that all these banks are bankrupt according to their own balance sheets if you look at their cash to deposit ratios. So all these numbers mean very little, especially since the Federal Reserve is plunging the markets with a bunch of fake currency and bailing out the economy insanely right now with $60 billion a month. It's absolutely crazy. And of course, Jamie Dimon isn't alone in saying that there's a recession coming soon. A lot of people have been talking about the coming recession, including the Nobel Prize winning economist Robert Shiller, who's been talking about it. And also something that we should be all very concerned about is, according to Bankrate in this Yahoo Finance article, nearly half of U.S. isn't prepared for a recession as economic clouds gather. And I'll just quickly say that as the Bankrate survey suggests, in a new study, the organization found that 4 in 10 of 2,000 people surveyed would be underprepared if growth turns negative in the next 6 to 12 months. The data included 16% who say they're not ready at all. So, John, let's talk about this. This is incredibly well, I don't even know what word to put on it anymore, because we've gotten to a point where it's gotten to the point where all these major economists that are Keynesians, that are complete control freaks, central planner maniacs, even themselves are saying there's a recession on our doorstep, as if it wasn't obvious to begin with. We've been talking about it for years, and we're getting vindication, but only because these people are trying to cover their butts. What do you think of what Jamie Dimon has recently said after years of praising the economy?
Well, actually, there's still one economist out there, and this is a tweet from Paul Krugman on October 5th that says otherwise. That this bozo is doesn't stop, showing how stupid he is. But it says, like, with capital letters. I'll share you can see the tweet there. It says, "Debt is money we owe to ourselves. Debt is money we owe to ourselves.
Oh, I saw
Debt
that.
is money we owe to ourselves." And of course, yeah, like we not the debt, not the student loans, not the bank loans, not the credit cards, not the auto loans, not the mortgages, not the individual bank or corporate loans, as far as I've seen. I guess he's talking about the government could just print mass amounts of money. But again, that just comes out.
Can you imagine this guy's actually teaching a master class?
Well, that's not the worst. He got a Nobel Prize in economics. That is the worst.
Well, they just hand those out to anyone these days.
It's like a participation medal these days, isn't it, Josh?
Yeah. Mm-hmm. And toe the line.
Yeah, but anyways, let's go actually into some economic facts there to back up that recession warning, which we've been warning about, and I believe in 2017 was when we really started to see the first blips of the global recession happening. And of course, economies like Canada, UK, the Scandinavian countries, Australia, New Zealand, Hong Kong, India. There's so many countries that didn't hit a very, very bad recession in 2008. Now they have created massive debt bubbles beyond any substance, and of course people are so saturated with debt that they barely have money there as well. It seems to be a general story around the world, and it seems like we hit like kind of peak fiat around the world, where there's no more people soon to in debt, other than lowering interest rates, going to zero, going to negative, trying to manipulate
yield
the economy.
curves inverting.
Yeah, and 22% of Danish mortgages are in the negative rate. That basically means that they don't really have to pay ever off their mortgage. You just sit there. If you just pay interest only, like the government does, you would actually have the the negative interest rate paid down for you. And it's basically declaring bankruptcy that loan is never going to be paid back. But let's take a look at the United States for a second that we're talking about here, and the recession that, JP Morgan is not sure, or I don't know what Jamie Dimon is doing, of course, over there. He likes to think he knows anything. The only thing he knows about is to print money out of thin air, and then use it on bad investments and then get bailed out by the taxpayers and by the U.S. government. That's what he
He's
thinks.
a welfare whore. That's what he is.
Yeah, he's a corporate welfare whore. That's exactly what he is. And it's he's one of those guys that, you know, have been pushing, and this is what we've seen around the whole economy since 2008. You had share buybacks propping up the share prices. Well, then of course they used debt to prop up those share prices again. And this is a stat that I pulled from Moody's actually, and this stat just shows how much debt is investment grade, how much is speculative grade, and as you can see here on the chart from 2010 till 2018, that amount of investment grade, which is in green here, has depreciated substantially, and as of 2017 there was a 70.40% of all the debt that was this is non-financial, so this is not the banks, but this is all the corporations in the United States that have issued debt, and 70.4% of that was non-investment grade. It was speculative. It's what the bankers call junk. And then, of course, it got even worse last year, which is now, it was 78.59%. And who knows, like this year, probably is over 80% now, that speculative grade. So that just shows you all this manipulation that have been used, using debt and creating that to, prop up and make an asset looks better than they are. All this stuff. And, of course, all the real estate bubbles around the world that has been created by this cheap debt. There's no way out of it now, and of course the central bank, since I would say since 1971 when they went to the fiat standard, has not been willing to let the economy, do what it's supposed to do to actually fix itself. It's not letting the economy regulate itself as it should. Of course, what they've done is just printed more money. They lowered interest rates. And of course now, you have the ECB and other, we talked about the ECB lately, line at 0%, at least the US has 2% currently in interest rates. But most of the bigger central banks are either, just above 2, or they're, most of them are at 0, and Bank of Japan is below 0. And what we've seen in Japan is what we can, see happening here, because nobody's willing, none of these academic idiots over there at the Federal Reserve or other places thinks that we should have a regular deflationary event that this whole system is based upon, of course, which is it's a fraud in itself. It's a Ponzi scheme, but that's how the bankers make themselves rich when it crashes. But again, it's this Ponzi scheme that they keep on propping up more cheaper money. But at one point, it doesn't matter. Like, it's not. I don't think it's actually gonna break because of the interventions that much. I think it's gonna break because of all the people around the world. You're looking at the majority of people around the world. Today, I was looking at a chart that shows over 86% of the assets of the people, most people have debt on them. And that is insane. So that's where we're coming from here. People believe that, their money that they have in houses is an asset. And of course, that's going to come crashing down when they find out that, they can't keep on printing this money and nobody's able to pay their debt back. So that's where we're heading towards here. And this is, of course,
I can't help but notice how, we're seeing this happen like a slow incremental car crash. Everyone has so much time to prepare because it's been centralized and pushed off for so long that it kind of blows me away how many people aren't preparing. And that's what I kind of wanted to get into for a moment here, is that as that bank rate study shows, it shows still nearly a third of Americans, 31%, aren't doing anything at all to prepare themselves for a recession. Now, on top of that, one of the things that I find is truly criminal is how, the inflation affects wages, and how the middle class has been destroyed, and how many people are in poverty, and two parents working 2 jobs at the same time and can't afford to pay the rent and put food on the table for their children. It's absolutely sickening what's happening. And in many cases, it's not necessarily their fault. fault. It's the fault of these central planners that have been destroying the economy and pushing people into poverty because they benefit from that debt. They benefit from that servitude that comes from that debt. And with that said, I mentioned that 31% note, but also I want to say from the same article, some 35% of the lowest earners, classified as those making under $30,000 a year, are taking no preventative measures in
because
case
they can't.
Of a recession, compared to 28% of those earning the most at over $80,000 a year. And that's exactly what I was going to say, John. They can't because they are spending every cent they have and going into vast debt to be able to put food on the table for their family while paying a crazy amount of tax, while dealing with crazy inflation that is a hidden tax that's destroying the price of living and making it impossible for anyone to sustain their own life and their family's life.
Well, yeah, let's take a look at the two biggest bubbles in the United States, which is in two biggest cities, which is, of course, Manhattan, and then in California there's several bubbles. But it's so insane. When you look at, I just recently, I gotta give a shout out to the Money GPS. He's a great guy from Toronto that does fantastic YouTube videos. But he was recently doing a video that is just hilarious, covering, the insanity of what's happening in the U.S. And they're turning into kind of like Hong Kong and Japan, and this was San Francisco and LA. So for example, in San Francisco, there was a 200 square foot shed that rents for $1,020 US. That is completely insane, of course. And then there was other places that now you have cooperatives where people are have a bed basically and a little bit of kitchen appliances, like things available for themselves. But they have a bed with, that they're sleeping in a bunk a lot of times. And that costs $800, Josh. $800. That's more than I pay my mortgage. That is I don't know even what to say about that. That's ridiculous. But that's what you get though with mass populations moving into places. You're gonna have mass amounts of currency chasing those same places and then making it unsustainable. And then all those people are gonna get into mass amounts of debt, pushing up the prices.
Combine that with Agenda 2030, and it's perfect.
Of course, yeah, and then you have like a slave population living in these what they want to build is these smart cities that we talked about, the 5G and the police state coming in. But that's what's going to end up happening, is shoving them into these major cities. And remember, when we had the last Great Depression in the 30s, 90% lived on the countryside, 10% lived in the cities. Today's opposite. Now you have 10% living on the countryside, 90% live in the cities. How are people going to be able to survive big economic calamity when there's only 3 days of food supply, when the economy stalls, when there's no transportation moving, things around that humanity needs, because idiots and morons, academics, banksters have, had this financialization of the economy that you could just make money with money, and then the real economy just gets, murdered literally by these policies.
That's another thing, John. That's another thing that needs to be noted, because, with interest rates going towards negative territory, and Donald Trump praised the U.S. economy, greatest economy ever, and also that he wants it to go into negative interest rate territory. Like, that's a good thing in the case of a crisis. That is a horrible thing. We recently went into that with J. Edward Griffin here on this channel as well, which you could check out. But with that said, the push towards a cashless society becomes more and more desperate, and with the smart grids being put in place all over the world, including Australia and elsewhere, Sweden, etc., and these Chinese-style social credit programs slowly being developed, and the desperation to move to a centrally planned digital cashless society with legal tender laws always going through the banks, meaning no one owns their money, then what you have is just a complete slave grid, and people aren't going to get their pensions. The pension shortfalls worldwide are crazy. You have this recession tied into the poverty, tied into these negative interest rates coming up right away all over the world, and the banks all collapsing and being bankrupt. What you have at the end of the day is the greatest crisis we've ever seen in history, and we can be called fearmongers all we want. We want to put forward solutions, but people have to acknowledge this, because we're coming so close, and we see that 35% of the lowest denominator when it comes to earnings are doing nothing to prepare. And then with that said, many of the people who are preparing, Yeah, and many of the people who are preparing don't know what to do. They're not preparing in the right way. They think they're preparing properly, but in many cases, they're just stacking money under their mattress in fiat. So, I mean, this is a problem. Of that number, it's even worse than that number, which is why we're here, which is why we're telling people about these things, because we want people to prevail from this massive collapse that is just a prolonged version of a smaller collapse that happened in 2008.
Yeah, and before we go into the solutions, Josh, I just wanted to show a couple of last charts here, because this is just the insane charts that actually shows what's happening. This is the current economic outlook, IMF growth output, growth outlook that just were today, the 15th of yesterday, on the 15th of October they put it up. But here you can actually see the global PMI, so the industrial production are plummeting, and most of them are into the negative. If you look at, like, this is the United States, United Kingdom, Germany, Japan, China, and the Euro area, the biggest, of course, industrial producers, they're all in the negative. And then if you go and look at contribution to global imports, global imports are starting to move into the negative as well. So the whole economy is kind of stalling on this debt-based system, and we're hitting an end. I believe we're first going to see, as we've seen Turkey and a whole bunch of other economies around the world starting to slowly collapse, and then that's going to just run in. Everybody's going to flood into the U.S. economy, as they have. They did that in 2001. They did that in 2006-07. They of course did that before the dot-com bubble and the great financial crisis. And then what you've seen is since then, of course they flood out again, and then now they're back in again because we have another financial crisis on our hands. But what's even more important to understand is that this financial crisis is actually the part of the same financial crisis that happened in 2008. We just haven't gotten out of it yet. The central banks have pushed in. I believe it was almost 400%. The Federal Reserve 416% since 2018 to the top. Then they cut only 16% of their balance sheet, and then they're having troubles. Now they got to go back in. We talked about this just a couple of days ago, Josh, where the repo interventions that me and Tim talked about a couple of weeks earlier. That has turned into, now it's becoming not QE as Powell
quote unquote.
Yeah, but what you're seeing here is just a global slowdown because we've gotten into so much debt. There's no way out of it other than deflation. But of course, central banks won't let that happen. So it's going to be deflationary as we've had since 2008 was a stagflation, where deflation was pressuring everything down, and then inflation from the central banks trying to push assets up. The thing is, there's actually, I was listening to on Real Vision, there's a great interview with one of the biggest experts on the real estate markets in the United States. He said that there's still delinquent loans from the financial crisis that haven't been paid over he said 5 to 6 years that they haven't been paid, but the banks don't want to put them on the market because that will collapse the whole real estate market that was there that tried to go a little bit up again. So they just completely manipulated this economy, and they're just juggling all these plates up in the air, all those sticks. You've seen those guys or gals that try to do that in the circus. That's exactly what the Fed is trying to do now, and the banks. They're just gonna, at one point there's gonna be one too many, and then they're all gonna come falling down and crash to the ground, Josh.
Yeah, it is absolutely criminal what we're watching. And again, those banks are bankrupt and they're dependent on massive bailouts. The markets have been completely propped up by the Fed for a long time. There's a plunge protection team for a reason. So most of the numbers are faulty and fake. And I think it's really a shame how it's going to affect so many people that aren't listening to us, and including those of the people that probably haven't watched this far into the video that are commenting, you guys are fear mongers and all that kind of stuff. It's nonsense.
I guess the numbers. I guess the numbers are fearmongers, Josh.
Yeah, I guess facts and basic economics. It's so sad to watch so many people just dodge it like the plague, and then they're going to be given the plague all the same. And with that said, $60 billion a month. the Fed is throwing at this problem. 60 billion. And will it fix it? No, it's going to make it way worse. It's just piling problem onto problem. It should have happened. The economy should have collapsed a long time ago. And the longer it's put off, the worse it's going to be. So the sooner we want it to come down. But there's more solutions than there are problems. So that comes down to, again, you guys being aware and educated and being responsible and financially stable. Responsibility is a hallmark of freedom itself, after all. But then food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block, as I always say. And of course, gold and silver as preservation of value, wealth insurance. It's really important to look at that. But that's my opinion. That's not investment advice. None of this is investment advice. Gold and silver aren't meant as an investment anyway. It's about purchasing power and maintaining that purchasing power. In the inevitable case of a crash, all fiat currencies revert to zero eventually, every single one. Ever. And the US dollar has gone on longer than anyone I know of. And with that said, also cryptocurrencies and fundamentally useful and decentralized cryptocurrencies and blockchain infrastructure technology that is really creating a solution to the problems that we see with the governments and the central banks of the world. So we need to look at that and understand that that is a revolution that's happening, or an evolution rather, and it's going to happen one way or another, whether you like it or not. So it's better that the market errs on the side of decentralization and creating solutions, rather than running scared as a government develops the next big crackdown on our individual freedoms with these centrally planned legal tender currencies, digital currencies. Anyway, John, as we wrap this up, this is going too long. Can you quickly just say what's your bottom line for all of this?
Well, the bottom line here is that we're seeing a stagnation in the whole global economy, even that it has fake numbers. And what we're heading towards is we're heading towards a brick wall yet again. And to get above that, who knows how much currency needs to get printed. And then, of course, by printing that, that you're going to destroy the whole economy. Now, I'm actually working on a massive report right now. I'm at 60 pages right now into it. But what I'm going to go into all the great details, all the stats and everything. So if you claim that there's no recession or no problems happening in the world economy, I'm going to show you every single little detail down to almost the corporations sometimes and to the mortgages. So I'll if you want any information on that, you just go on my website, theeconomictruth.org, or you could just send me an email at john@theeconomictruth.org to get some information on that, because that's what's needed right now. You need to see all the information out there. I'm going to go into, of course, solutions in that report as well when it comes out in about, I think, late November sometime. So just stay tuned for that. But again, we can't save this world economy. They can keep on, printing money, do quantitative easing, all this stuff, but they're just going to it's going to be that breaking point, Josh, as I was saying a little bit earlier, where people can't afford food, people can't afford anything anymore, and then people don't care anymore, and they're going to stop using that garbage currency that these central bankers and bankers have created.
Yeah, absolutely. These people are a bunch of criminals and fraudsters, and they should be treated as so. In the end, it comes down to you guys and breaking free from the system, and also just creating your own solutions and not looking for someone else to do things for you. It comes down to you as a responsible, free human being, and don't allow anyone to control your way of life and your freedoms and your finances, because ultimately they're not just destroying you as a free individual. They're hurting your family, or they're hurting the future of your family. They're hurting other people all around the world. You should care about this. This matters. Now, of course, for those interested, John and I are both going to be at the Red Pill Expo 2019, the second one of the year in Mesquite, Nevada, right away in November. So make sure to get your tickets to that using promo code WHAM. You'll save money on your tickets, redpillexpo.org. And we are getting shadow banned to death. We are seriously getting ripped to shreds. We've lost 80% of our audience since January via the hand of shadow banning on YouTube. It's crazy, the manipulation. I've been documenting it for years, and YouTube's got another thing coming when they finally do crack the final whip and delete our channel, because I've been compiling seriously unbelievable stuff, screen grabs and screen videos and all sorts of stuff, and conversations I've had with people at YouTube for years now. And when they finally cut us out and delete our channel, which they probably will in the next year and a half to 2 years, we're going to be in trouble too, because most people aren't following us to the alternatives that I asked people to do. But also we got so much compiled that it presents a really big case against YouTube. So anyway, it comes down to you guys for now as we work on the next phase in trying to save this media from being completely destroyed and deleted from the time, like a book burning, a modern day book burning. We are doing whatever we can to sustain it. But in the meantime, while we work towards getting people on BitChute and float.app, flote.app, we are also looking for ways for you guys to pledge just $1 a month or more. It really helps save us from being completely destroyed. So make sure to check below in the comments and description and watch our outro video playing right after this. Thanks for joining us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth. Be the change. Like what you see here at WAM, don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely, extremely appreciated as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime as we prepare for the next big step is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale. So make sure to find us on float.app. That's flote.app. At Josh Sigurdson, as well as at WAM, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are 2 major events coming up that we are extremely excited about, and you can use promo code WAM, that's W-A-M, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth. Be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.